And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. This is the show where we put you in front of where the action is in the broader markets. And as always, it's with an eye toward helping you put together a solid plan, not just for next week, but even beyond. Of course, my goal here is to help you uncover stocks and areas of the market that can help you outperform the broader indices. And of course, as many of you know, lots going on this week. We'll take a look at the agenda. First up, as always, let's take a look at the current markets. Where do we stand after this week's decline? From there, we're going to go ahead and take a look at earnings season. It has been a bit mired behind a lot of other headline news, but there is action and activity going on as it relates to earnings. Since we're in the beginning stages, I'm going to share with you some of my insights. Lots of big names, of course, still due to report their Q4 numbers. Stocks hitting a new high in the face of selling elsewhere. And of course, the reason for taking a closer look here is when the markets are under selling pressure, it can be really helpful to take a look at those stocks that are defying that distribution. And this is, of course, with an eye toward once the markets do turn, we get back into a period of accumulation, those stocks that were able to non-defensive areas that were able to buffer and not be constrained by those downtrends will go on to trade higher. And REITs and utility stocks, we'll just take a look at a couple of names in there. We did see a bit of a move into defensive areas earlier in the week. Unfortunately, it did lose a bit of steam, but there are a couple of names certainly worth taking a look at. And then lastly, what I call end of week themes that are emerging, and it will tie back with earnings as well as stocks that are doing well. So before we get into all that, let's just take a look at some of the news headlines from this week that has impacted the markets. The Federal Reserve did come out earlier in the week. They were not very constructive on the economic recovery prospects. They were definitely put a damper to any euphoria related to that. And we did see a lot in the way of recovery stocks negatively impacted. Also, of course, this Reddit, what I call revolution, the short squeeze that is really taking hold upon the markets. It's not impacting just those select stocks. I'm sure GameStop, everyone is aware of that. But there are other waves that are ruffling through the markets where hedge funds that need to cover their shorts, they need to raise capital. They are selling other stocks elsewhere to do so. So there's more than just those short squeezes that are really kind of impacting. There's a stability to the market that feels a little bit rocked due to this. And then also into the economic numbers. Durable goods did rise in December, but they came in below estimates. And then from there, we did see weekly unemployment claims yesterday. They did rise for the second week. Consumer spending fell in December, the second consecutive month. And then from there, GDP declines, the steepest declines, that should say 1946. So in essence, we are seeing not only Fed comments, but there are economic numbers that are supporting the concept that the slow but steady economic recovery is running into a little bit of a speed bump, but just enough to get the markets really off-centered. So let's go ahead from here. As always, we want to get a handle on where the broader markets are, because you want to have that backdrop, of course, ideally in an uptrend. For those of you that watch this on a weekly basis, you'll know that I'm always on the prowl for that index to be making, ideally, of course, newer highs, but finding support above these shorter term. This is the green 10-day simple moving average. Purple is your 21-day. When we are in these really nice uptrending periods, you can see that that is the case. The selling this week that began with Wednesday's Fed comments, we did get a little brief reprieve yesterday, but of course the selling did continue today. So we're in a period here where your outside momentum indicators, your RSI and your stochastics, are in negative territory. I'm going to dig in a little bit more with my MEM Edge report as far as using historical precedent and what to be on the lookout for. But for our purposes now, you can see that that uptrend has been interrupted. So definitely worth noting, but if you are considering putting money to work on this pullback, the broader market indice would suggest otherwise. So let's go in, take a look deeper beyond the broader markets. We want to look at these underlying. I'm going to start here with the S&P 500, those 11 sectors coupled with that S&P. I've gone ahead and added this RSI indicator descending order. And from here, what we are on the lookout for are areas of the market that are withstanding the downward pressure. So what we can see at first glance, I talked about REIT stocks, real estate. Healthcare definitely has a defensive component to it. There were periods throughout the end of last year into the beginning of this year where my work was pointing toward healthcare biotech that had growth prospects, but for sure, and I'm going to share with you healthcare stocks that withstood the pressure this week to highlight the fact that the defensive nature of healthcare is very much in play and on display. So from here, we can go ahead and just take a quick look at some of these weaker areas of the market. So industrials, now this is that big recovery play. I can tell you from my work, I did add stocks, pardon me, within the industrial space to my MEM Edge report, but with great dismay, I have seen many of them fizzle. So a lot of this, the transportation stocks are not doing well. That is an area ideally that you do want to have performing well, indicating economic expansion. So that is the industrial area. I also wanted to take a moment and share with you technology. This is a big leader well into certainly this last 3 quarters of last year coming out of that bear market. And we can see recent action among tech where it is coming under distribution and the volume characteristics are there. When you're looking at XLK, it's important to know that Apple and Facebook account for over 40% of this index, and both stocks under pressure this week. Facebook down 6%, Apple down 4.5%, and that's all about earnings. We are going to get into that, share with you some insights as it relates to earnings. Before we do that, let's drill down just a bit further, get behind those sectors, see if we can drill down and get better intel as to what is taking place, certainly within the last week. What I've done is added the small cap index. I've also added the NASDAQ, the Dow, and then we have some other underlying sub-industry groupings. From my work, I focus on growth. So I have an tech software ETF, IGB, semiconductors, banking is an area that had been strong. And then we do want to take a look at volatility, certainly given what has been taking place over the last 5 trading days. Again, that RSI has been added, descending order, and sure enough, volatility appear in the forefront. So we do want to pay attention to volatility because from my work, certainly anything above that 18 level, once we start creeping above 26, that can be quite negative for the markets. At this juncture, we did close the day at 33, and we really only need to go back to this September period and late October pre-election period. Urge you, take a look at the markets. You'll see we had a correction and a pullback. So this volatility is this VIX index, also known as the fear index, is very well worth a close look. From here, we can see that Treasury yields. Now, of course, Treasury bonds can be viewed as a safe haven financial investment. So we saw a nice uptick here in Treasury yields, the 10-year. It's up, it's actually mostly flat for the week, but today it did gap up 3.4%. Again, that flight to safety concept. Unfortunately, it did not translate. We'll take a look at bank stocks moving along here because usually, certainly higher interest rates are good for banks, but as far as improving their profit margins. But biotech's, Jeff, definitely a very risky area. We look at the broader markets, the S&P was down 3.2%. Biotech stocks were down 2.4. So this is an area that I mentioned to you. I'm going to share with you some themes that are beginning to emerge as far as not only earnings, but also some of the underlying dynamics within biotechs, really just how critical they are to the general population as far as the offerings among these biotech companies, whether the economy is on sound footing or not. So as we move on, we can see some of these other areas that had been really outpacing. This is that software ETF. We can see that it did fall back. It had that nice downtrend reversal attempt that is faltering a bit here. And then semiconductors, they really did take it on the chin this week, down over 6%. But I will argue that by and large, they have been the superior outperformer going into this week. So any kind of a pullback would not be highly unnatural, but this is the area that you're going to want to pay attention to as far as downtrend reversals. You can scoop up some high quality growth names at a discount. And then, of course, I did mention transports really getting clobbered, a lot of that earnings driven. They're just not putting out those numbers. So not what you want to see as far as foretelling an economic recovery. So let's go ahead from here. And what I will do right now is just take a very brief break. When we get back, I'm going to share with you some of those earnings themes that are emerging, take a look elsewhere as far as stocks hitting new highs, and we're even going to look at some base breakouts. So we will be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. Let's go ahead and start with a close inspection of some of these bellwether names that reported earnings this week. This is the theme that I identified actually 2 weeks ago as far as the markets and investors' response to these earnings releases. This is Apple, and we are looking at a daily price chart, and you can see the stock really hit new highs going into those numbers. The anticipation was quite euphoric as far as sales, iPhone 12, and other as far as laptop devices. And in fact, Apple's numbers were superior. They hit a record high, but take a look. The stock is down for the week. I mentioned to you that it has underperformed, down 4.5%. But all of this has everything to do with Apple's guidance going forward. Now, I will tell you, management has not given guidance. This is the fourth quarter in a row, but simply what they have done is mentioned that they anticipate headwinds and increased cost going into next year, which in turn, into this year, which in turn was negatively interpreted. So let's take a look at Facebook. They did also come out. Facebook also had exceptional numbers, but take a look. The stock is down 6% for the week, and this is in case where management also talked about headwinds going into 2021. So those names that are coming out with numbers and are actually responding constructively. Microsoft came out with numbers this week. Take a look. The stock broke out of this nice base, powered to new highs, up 3.2%. And here in this case, management did guide higher. So that's going to be what you want to pay attention to for those stocks that you own as you're going into earnings. Be aware we're not in a period similar to recent quarters where not great news is ignored. It is being paid attention to. So let's take a look at some other companies that came out with numbers this week, and they actually came out with very good numbers, and the markets responded positively. I think you're going to see a theme here that caught my eye. So first up, we're looking at a smaller company, SMED, and we can see the stock really had been in a confirmed uptrend going into this week's earnings. But I did want to point out to you, they are in the medical space. They do dispose of medical waste, but they did come in 533% is their year-over-year earnings estimates for this year. They did come in above estimates. So nice confirmed uptrend. Nice to see that in the face of what we are seeing elsewhere. Also in healthcare, we can take a look at a HOLX, HOLX. We can see this gap up. The stock had deteriorated with the markets, but in response to earnings, they are back on track as far as potentially regaining that nice uptrend. We can see the RSI is now up in positive territory, and we are poised to have that black line up through the red on this MACD. This particular company does address women's health issues globally, imaging and other types of products. And the stock is a huge grower. The year-over-year estimates are actually, they reported earnings that were 370% over the prior same quarter last year. Estimates for this year are for 121% growth for HOLX. Let's take a look at another healthcare name here. This is Danaher, DHR, certainly an old name for those of you that have been investing for quite some time. But this particular company also came out with stellar earnings, 63% relative to last year. They have a number of products that are really in high demand, a 4-in-1 COVID tests that also test for flu, antibody tests, and so on. So management also guided higher going forward. We can see nice volume on that downtrend reversal. Another stock that we can look at, certainly bigger, but it is within healthcare. And if I haven't mentioned it, that's what I am pointing out to you, that thematically, as it relates to earnings and stocks that are able to buck the downtrend occurring elsewhere, healthcare is shining. This is Abbott, ABT, of course. The company not only came out with very good numbers, but they guided higher. And that's that big key component I talked to you about. They do have COVID test, and the company's revenues did they did come in ahead of estimates, but we're getting some nice volume characteristics as the stock breaks out to a new high. We're a bit overbought, but definitely one to keep on your radar screen. So as it relates to stocks and earnings that have earnings coming up, let's just take a quick look at some of these bigger names. You'll want to be aware of them. Amazon, Google, all due to report their numbers next week. CMG is another large company, Chipotle, Mexican. We can see it's holding up here remarkably well, but let me share with you a company that did report here this week and not so positive. This is Starbucks. Their numbers were mixed and guidance was not great. So we can see, again, we are in a bit of a bumpy earnings season so far. It is going to be take a bit of diligence as far as, particularly if you're shorter term in your trading. So let's take a look at other healthcare stocks, given this theme that is certainly at the end of this week is seemingly emerging as far as those stocks that have a lot in the way to offer. This is QDEL, QDEL, and we can see it's a little bit dicey here. This is all about COVID testing. They were a big winner out of that bear market, and news driven here where other companies were potentially coming out with better products. But QDEL is the leader in testing. They were the first to have that quick testing. They've been adopted by many school districts and large sports organizations. But let's take a look. We can see it's in a nice confirmed uptrend, finding support at this upward trending 10-day. And then your outside momentum indicators, your RSI and MACD up here in positive territory. Another certainly, this is vaccine related, not so much in the way of testing. Came out with great news today. This is Novavax. They had positive clinical trial results, but more to the point here, when we look at this chart, we can see this nice multi-month base breakout. And it did so in very big volume, so quite constructive looking. We can see historically on bullish news, the stock will have a tendency to gap up, pull back, and then experience another leg up. So I would say keep that on your radar. One last name we can take a quick look at here is a company that provides COVID testing, but it is saliva. So it's something that can be administered in home. You don't need to go out of your house, but we can see that it too is potentially forming the right side of a base with positive outside momentum indicators. So let's move on. I did want to share with you some stocks that are hitting a new high, and I kind of got a chuckle out of this because there seemed to be a bit of a theme within the markets, and certainly within perhaps consumers within the US. But SNBR, Sleep Number, is that mattress or bedding company. And there's really been seemingly innovation occurring within this industry, but it certainly has captured consumers' attention, and they really of course, we all want to ensure good night's sleep, but we can see SNBR really is not bothered by the downward pressure in the broader markets. It's very much in this nice confirmed uptrend, finding support, a bit overbought. I would look for a pullback similar to this late December period, but I did want to point that out. From here, we can take a look. This is a company that did report, actually, they did not report earnings, but they did have a base breakout. But more to the point is pizza, PZZA, Papa John's, estimates being revised upward for both this year and next. So this nice base breakout hitting a new high, implying that we are all sitting in bed eating pizza, maybe as a way to lick our wounds given a tough broader markets. But let's move on and take a look at some other stocks that are hitting new highs very rightfully. And I do believe I had the ticker wrong, and that is not the stock that I wanted. Let me try this again because it is definitely worth looking. What I'm trying to pull up here is Walgreens, WBA, and we can see it's a little bit of a sloppy chart here, but a couple of items or a couple of what occurred this week. The company is all about vaccinations. They performed quite a bit. They also came out with positive numbers, and they had the appointment of a new female CEO, which is being very widely and positively received. So we can see the stock gapped up to a new high on Wednesday. It's coming under some pressure here, certainly with the broader markets. But let's take a look at a better example of a stock in that drugstore space. Of course, it's already had a pretty significant advance here, but worth noting, this is Rite Aid, and this is what I would call certainly a defensive stock. The need to have certain drugs at your disposal is going to be critical regardless of the economy. Rite Aid actually has begun home delivery for certain drugs. And then also the company is providing free COVID testing. So they're getting a lot of traffic, and we can see that it is hitting a new high, but again, not the most attractive at charts. I would pull this up on a weekly to give you a better feel for the fact that the stock is breaking out of a 1-year base. So we could be very well on our way to a downtrend, a multi-downtrend reversal. So certainly keep this on your radar screen. A couple of other names and areas that are picking up this week. This is Polaris, PII. It is poised and in fact has broken out of this almost 2-year base. The company does manufacture and distribute outdoor four-wheel snowmobiling, and they've seen sales really explode. 83% year-over-year earnings growth, 15% above estimates. So interestingly, we are seeing areas that are performing well, again, based on earnings. DKS is Dick's Sporting Goods. And again, another theme as it relates to outdoor. That is a weekly. Let's go ahead and pull up a daily chart, give you a little bit more in the way of some color here. They are calling for 60% year-over-year earnings growth this year for DKS, one of the last standing as it relates to sporting goods retailers, but it is holding in quite well. So I did want to move on. We are getting a little bit down as far as time, but I wanted to talk to you about ETFs and some ETFs that are holding up well. And this is, of course, with an eye toward those that would rather not jump into the markets, but rather purchase an ETF that has a nice diversified underlying a number of securities. The first up here is iBuy, IBUY. Very nice, significant uptrend. This is all about online retailer. And I'm going to share with you some of the underlying stocks that are the primary components of IBUY, GRP1, GRPN. This is Groupon. We can see it's just on the verge of reversing this downtrend. So in addition to the ETF, keep your eye on Groupon for a potential downtrend reversal here. We can also take a look at RVLV is another big holding of IBUY ETF. Revolve, this is a retailer, appeals to millennials and a very confirmed uptrend. And another big holding here is SFIX, Stitch Fix. This is one that I would point out to you that was a short squeeze play back here in the beginning of December. The numbers really were not there, and it is continuing to see. So keep that in mind with GameStop and some of the others. There's another short squeeze play that occurred actually 2 weeks ago, and you can see that it's not going to unwind that quickly. This is 3D, DDD is the ticker symbol, and just bearing in mind with some of these others that have had these tremendous short squeeze plays that it can take time for these to eventually play out. Let's go back. I'll share with you one other ETF. And it is a theme, if you go among these ETFs that you'll see. This is TOKE. The cannabis market is one that is also withstanding downward pressures elsewhere. I'm going to leave it at that. I urge you, take a look at my MEM Edge report. I'm going to dig into the markets, highlight what you need to be on the lookout for as far as potential near-term downside and where we are seeing strength, as well as other insights. Have a great weekend, and I will see you next Friday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.